Hey everyone, welcome to the Teleinvest channel. So in today's video, we're going to look at stocks for investing. How can one pick stocks for long term, especially if you're looking for a period of 3 to 5 years? How do you pick stocks? And even if you want to do a sip on some specific very good stocks, then how do you do that? That's going to be a focus for today. And I'm going to take 6 examples which are looking good for investment to help you understand how to start investing. So let's get started. But as always, this video is purely an educational video to help you understand how to apply technical analysis for investing. Okay, so having said that, let's get started today with our first stock. The first stock for today is BAYER Industries. Yes, it's a very, very good company. It has been posting very good sales numbers, and also of late it has been breaking out from a very long consolidation. So let's look at first the fundamentals. Now for fundamentals, if in case you're wondering which website I use to take these data, so it is from screener.in, right? It's a very good website to look at fundamental data, and it is very clean, concise, and that's why I love screener.in. So this company, BAYER Industries, actually is a large cap company. It has around 58,000 crores. So if you're a conservative investor, this might not sound very good to you, because large cap companies don't really give great returns and they tend to consolidate for some time before heading higher. But I think BAYER Industries might give decent returns even if you're a conservative investor. But especially if you're looking for a SIP, these are the kind of stocks that you have to focus on. So it has 58,000 crores market cap, PE of 43, ROC of 21.7%, ROE of 18.5%. Now these are some really good numbers, and when you club this with the sales growth, you will understand that this company is a very good company. The sales growth for the last 5 years has been 23%. For the last 3 years has been 24% CAGR. Also, the profit growth has been 39% CAGR for the last 3 years. Now, if you look at the short-term growth, last 3 years, that's above than the long-term growth. Long-term growth has been 29% CAGR, but short-term growth is pretty high. So it looks very good in my opinion. And if you look at the sales here, the sales has gone up from 8,000 crores to almost 7,000 crores in the last 12 months. Right now, that's some phenomenal numbers. Right now, this is from the agrochemical space. Now, there have been companies which have not been doing well, especially if they are focused on mostly exporting. These companies are not done well. But BAYER Industries has posted very good results, and also the operating margins have gone up from 17% to 24%. Now, always I tell, if you see an increase in the operating profit margins along with sales growth, then that shows that the company is focused on increasing its profitability, and also the operational efficiency of the company has been very good. Now, in this case, the operating margins have gone up from 22% to 24% along with the increase in sales growth, which has led to a massive profit of 1,200 crores in the last financial year. Now, this is a solid company. Even if you want to do a SIP for the next 3-5 years, you can continue to do, unless the company keeps posting such good margins and such good sales and PAT numbers. So that's from a fundamental perspective. Now you can go ahead and look at this company annual reports and do more research. But for this video, my analysis is going to be short and crisp. So moving on to the fundamental analysis, technical analysis here. This company has been in a long-term uptrend. It has been trading around 100 rupees in 2012-13, and now it is at 3,700 odd rupees. Right now, this is a very long-term uptrend. Right now, if you see, every time the stock goes up, then it consolidates. Now here we saw a massive consolidation for 5 years. Then again the stock went up. Now again we saw 2.5 years consolidation or 2 years consolidation, and again the stock is breaking out. So the stock has finally retested this channel support over here. Now if you see, every time the stock retests this channel, it goes higher, it goes higher, and it goes higher. Now again, I'm expecting this stock to head higher and probably give you very good returns in the next few years. So in case you want to really consider this for long term, and whenever there's a dip beyond around the 50-day moving average or 200-day moving average, you can also do a lump sum. Right now, if you zoom on to the weekly charts here, now this is the recent chart since September 2021. Now this is a beautiful breakout here. Now if you see, the stock went down, again it went up, got rejected from this channel support, went down, up, down and up, and now it has broken out, and it also retested this channel support. Now I don't expect the stock to come below the support anytime soon, because this is a major support zone. This has been almost 2 years support zone, and I think we are going to head higher from here. Even if you come below, it's okay. You can, if you want a SIP candidate, if you're a SIP investor, you can continue to SIP. But if you're a very aggressive investor, you can keep a stop loss around this zone. Right? If you're conservative, then you can also keep a stop loss around this zone, and you can continue buying till the stock holds on to this level. Right? So entry is at current market price 3850. your stop loss is going to be 10% around 3450. Now the stop loss can also be on a weekly closing basis or a monthly closing basis, because the position size is going to be just 5%, right? So I do not recommend a daily closing basis stop loss if your position size is just 5%. And if you're investing, you can wait, especially in these companies which are very good, you can wait and take a call at the end of the week if you want to continue with the stock or not, right? So the target here is around 6500. It can go much higher. As I said, in the next 5 years it can go even much higher, probably to 10,000 levels as well. But for me the immediate target is the channel middle, which is here around 6500 levels, right? Now that's the first target for me. Also CCA and relative strength also has been very good. So even the market is weak, the stock is going up. So overall, a pretty good first candidate from our 6 stocks today. So let's move on to the second stock. This stock is this stock is from the railway space, which is IRCTC. Now the entire railway sector actually has been a very good theme for the last couple of years. We've had many stocks running up, but this stock has been consolidating for the last 2 years or so. Now again, a very large cap company, 53,000 crores market cap, PE of 52.4, ROC is 59. So for me, this is not overvalued, because the company has been able to generate a return on capital employed of 59%, ROE of 45%. So the PE will obviously be high. Do not just look at the PE and consider the stock is overvalued. No, that's an incorrect approach to valuations. Now here, the sales growth has been very good, 16% sales growth for the last 3 years. Also, the 3 years profit growth has been around 24%. So again, very good numbers. And the sales has gone up from 1,000 crores to almost 3,500 crores in the last 8 years or so. Now, expecting this sales growth to continue, and probably that's why the stock already ran up so much after the COVID crash. But for me here, the most important point is the operating margins again. Now, companies which have been improving the operating margins will tend to improve, especially if the sales are going up. Now here also the PAT has also crossed 1,000 crores. So for me, these first 2 companies are very good companies. They are sub-candidates. Now taking a look at the charts or the weekly charts here for IRCTC. Now this was the COVID low when it was listing. Sorry, this was during listing, the stock went up. During the COVID, it crashed all the way down. And now we are retesting that channel support or the trend line support here. This is not a channel, this is a trend line support. And we had a breakout. We went all the way up. The crazy move from 300 levels to almost 1200. But now we have corrected and come back all the way to 600 levels. So it's almost 50% correction. And we also have consolidated nicely on formed a base here. Now the volumes this week have been very good after almost 1 year or so. And after the results, the stock actually went up. So overall, I think the market is still looking to buy the stock given the growth prospects. So this stock is a second stock from a fundamental perspective. Now moving on to the weekly charts here, if you see here, we had a massive crazy downfall. The stock actually fell down from here all the way down, and we kind of made a double bottom here, right? The stock reversed from the same support zone over here, right? Now what I'm expecting is the stock has probably broken out from the trend line last week or this week, and now we had a significant increase in volume as well. So for me, this looks like a proper base with the move, with the price falling down less and less. And I think if we break out above the zone of 660-70 levels, then we are heading much higher from here. Now you might be questioning why I am giving the stock in spite of the relative strength being weak. Yes, the relative strength has been weak, but the markets were weak last week and the stock is rising up. Probably it might consolidate around the zone for some time, and it might outperform the markets, and then it might head higher from here. So entry at 663, stop loss of 600 or 9.5%. We're looking at targets of 1200, which is the recent all-time highs, right? Again, the position size is 5%, and do not sell these stocks just because the targets are met. Try to ride the trend and see where the stock heads to, right? So moving on to the third stock for today is from the agrochemical space, which is BAYER CropScience. Again, a fundamentally very beautiful company. It has amazing sales growth, PAT growth, and also a decent size company, 21,000 crores market cap. P is 30, ROC is 33, ROA is 25. So slightly better numbers than Fiem Industries, but for me, this is again not overvalued. Now, here the sales growth has been very good, 13% in the last 3 years, 6% in the last 3 years for the PAT growth. But overall, the sales has gone up from 2,200 crores to 5,000 crores. Last 3 years, also the growth has been decent, right? Here again, the margins have again kind of stagnating around the 18-20% mark. So overall, for me, it's not a very bad sign. They are kind of stabilizing around 18% mark, which is higher than the 2018-19 numbers, right? So still pretty good numbers. And the PAT also has been doing very well, around 750 crores. So overall, all-time high PAT as well. So that's from a fundamental perspective. The technicals, again, a beautiful long-term channel. Now, when you draw a channel, you have to connect the lowest points in the channel. Now, this is a primary trend line support, And if you extend this, you have a beautiful channel on both sides. Now, in case you have not seen how to draw channels, I've done a video last week, so do check out that video. It has all the rules that you have to know how to draw channels. Okay, now here again, the stock has been going sideways since 2015 April, I think, right? So it's just up 10% since that highs. So we've had a massive sideways consolidation, and now the stock retested this channel support here, had a breakout somewhere after COVID, but they retested, and now we are probably heading higher. Now this channel support gives me confidence that this stock will not probably go down further, right? So it's a very, very good bet, especially from fundamental perspective. And remember, 8 years, no returns. So if it starts moving higher, it can move quickly and it can give some decent returns. So moving on to the weekly charts, you can see that flag here, which I kind of highlighted here, kind of a parallel channel again. And if we break out above this parallel channel, we are heading higher, right? So until then, you can keep accumulating the stock. And CCA also has been good. Relative strength is turning around, and I think we should probably start outperforming markets soon. But here, the stock is breaking out of a 4 weeks consolidation, and we are heading higher. Volumes have been also very good. So entry at 4755, stop loss of 4300, which is 9.5%. Stop loss is around the weekly swing low over here on 4300 here. I'm looking for targets of 8,000 or 68%. Now remember, if you're a conservative investor, keep your stop losses to this lowest point in this year, right? So that's the lowest point. In case you want to buy on dips, you can buy, because the trend is long-term trend is up, and you might get some decent returns. So if you're liking my analysis until now, don't forget to buy me a coffee. You can support me. It's a small contribution from your side for me, for my channel and my content. And you can also share this video with your friends and ask them also to watch my videos and learn. A lot of people have been benefiting, so do share this video with your friends and family. And if you're new, don't forget to subscribe to my channel and also like this video. So let's move on with the fourth stock is Caplin Point. Again, a fundamentally very, very good company. The stock has not done well for the last 6-7 years, but I think it is starting to outperform the markets, and we can see some good returns. A mid-cap company around 7,800 crores. ROC is pretty good, 26.8, P 19.9, ROE 22.2, sales growth of 19% in the last 3 years, and also profit growth of 28% CAGR in the last 3 years. The sales have gone up 10 times, almost from 100 crores to 1400 crores. Now that's some phenomenal numbers, and that's why probably stock had a very great run, in the last decade. Also, the operating margins have gone up significantly. It has gone up from 20% to almost 30%, right? Now, this is on huge sales. If they can continue this with this kind of margins going forward, this can be really a multi-bagger. Now, this is one of my favorite picks from all the stocks today, because it's a mid-cap company and there's a huge potential in the pharma space, and especially they are expanding in the US. So it's looking very good from my perspective. Also here, the net profit PAT also has hit an all-time high. So in case you're looking to form a portfolio of stocks for investing, these 6 stocks can be your first set of bets, right? Keep a stop loss around the weekly lows or wherever you want, or just start a SIP and they might do well, right? So looking at the technical analysis of Caplin Point, again, a beautiful long-term channel. Now, remember I said this is the crazy run we had in the stock. It almost went from 1 rupee to almost 700 rupees in just 2010 years, 8 years, right? It was a phenomenal run. And I think the market has understood that this is a very good company. So it has been going sideways for the last 6 years, and it is again breaking out. So the price has retested the channel support in my opinion. So I don't think we are going down further. So if you can keep the stop loss around this point, then it'll be a very good point and you can trade this and invest in the stock, right? So yeah, that's the channel. And if you look at the weekly charts, we have broken out from that highs of August 2021, and we are now breaking out, right? So you can look at the volumes also here. The volumes have risen. So I'm slightly late in the stock, but yeah, looking at the potential, I don't think we're very late. We are just on time probably for this massive run in the stock that we might have. So entry at 1030, stop loss of 870. 870 is just this weekly swing low. After the results, the stock went up crazy. And then we're looking for targets of 2800 here, which is 172% returns from the current levels, right? So it can go to much higher levels in the next 10 years. So if you're a long-term investor holding for next 10 years, you can continue to hold, and the stock might give you good returns. The fifth stock for today is from the auto space, which is Fiem Industries, right? It's an auto ancillary, a very small company around 2,600 crores. Again, PE of 18.7, ROC of 26.6, and ROE of 19.9. Now, if you look at the pattern of the stocks I'm selecting stocks where ROC is pretty good and the PE is not very high, right? So the PE is less than the ROCE. Now, from my perspective, if a stock is trading below the ROC, the PE is below the ROCE, there is a potential for that stock to give some returns, right? Here again, the sales growth and the PAT growth have been very good. Last 3 years CAGR has been very good. So overall the sales has grown up, almost tripled in the last 10 years, 535 crores to 1500 crores. But the last 12 months has been very good. Also the operating margin has been kind of stable around the 11-12% mark, but is again rising slightly. Also the PAT has been good, almost 100 crores PAT in the last 12 months, right? So again, we broke out from a technical perspective. We had a breakout here in July 2022, and then we almost had a 1 year sideways consolidation, right? So we are having a massive consolidation here, and it's just a matter of time before we head higher, right? So that's a beautiful channel, retest the channel, and we might head higher from here. So if you look at the weekly charts, we had a breakout here, and we went almost sideways, 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 and now we are breaking out. Now, just because the stock has broken out from here, what you could also do is invest small amounts every week, every month, and you can accumulate a good quantity before the stock eventually breaks out, right? Now, I really trust in weekly major support zones. They usually do not break on the downside, or they usually tend to hold, and the stock tends to head higher. So you can trust these, and you can invest some money if you want to, right? So here entry is at 1990, stop loss of 1700 or 14.5%, and looking at targets of 2800, which is the first target of 40%, and then eventually the upper end of the channel. I'm looking at this channel. The upper end of the channel is 4200, which is around the next target that we have. So again, a very good stock. It's been outperforming quite a bit since the last couple of years. It's been doing very well. So in spite of the weak market, so I think there's a huge potential here, and you can consider the stock as your fifth stock. The sixth stock is Cupid. Again, a very fundamentally very good company, just that the stock has not done much in the last 7 years, and people are frustrated, right? Fundamentally not very good, fundamentally decent compared to other companies. So relatively, this is not very great company, right? But look at this PAT growth and sales growth for last 5 years. It has been pretty good. Just that in the last few years, it has not done well because of the problems that companies had in terms of sales of products and all of that, right? So, but overall, I think the sales has been pretty good, from 26 crores to 164 crores. It has been growing decently. The last 3 years, it has been almost stagnant, right? But this company is primarily dependent on exports, right? So if there are kind of markets like African markets kind of do well, or even the US markets, if they do well, they might actually see some decent growth in their sales. Okay, so primarily a very small company, small cap company of 438 crores. PE of 15, ROC of 26.6, and ROA of 20.4. So for me, these numbers are pretty good. It's just that if they're able to grow their sales one quarter, if they give a very good results, then the stock will start running up, right? It's just a matter of time. The reason I'm saying this is because this stock, since 2016, it has just been going sideways, right? So it has been just a small dip, and then we are literally going sideways for the last 3 years, right? It's a very tight range of 200 rupees. And if we break out about the zone, we'll see a multi-year rally in the stock. Trust me, we can do very well if this breakout holds this month, right? So that's the sixth stock here. And if you zoom into the weekly charts here, you will see that we had a breakout with volumes, and then we kind of came all the way down. Now remember, just because a breakout happened with volumes doesn't mean the stock will head higher, right? This is the exact perfect example. A lot of people have a misunderstanding that if a stock breaks out with volumes, that it will do well. There's a chance it will probably again pull back, but it hasn't broken the previous swing low. You see, we're going higher and higher. We have not broken the swing low on the weekly charts yet, right? So overall, the uptrend is still intact for me. So entry at 330, a stop loss of 21.5%. Yes, it's one of the highest stop losses for today. Targets of 112% or 700. Target of 700. And again, the relative strength and the CCA are looking good. So volumes have been picking up in the last 4 weeks. So after the results, the stock gapped down, but it has completely recovered and it went all the way up now. So overall, a very, very good company from my perspective, at least. And I think we can do well if the company is able to perform well in the African and US markets, right? So that's the 6 stocks, a short summary. So these are the 6 stocks: Fiem Industries, IRCTC, BAYER, CorP, Caplin Point, Fiem Industries, and Cupid. Obviously, the least risk is in the top 2 stocks because they're large cap. You can go on a SIP mode, and the highest risk is here because small caps are volatile, and that's why the stop loss is also deep, right? So the more volatile a stock is, the more stop loss would be more deeper, right? So that's the kind of stocks that we have for today. Overall, for me, all stocks are fundamentally decent. They are not very bad, especially Cupid compared to other stocks is kind of okay, but other stocks are not really very bad. They're very good companies, and you can also consider a SIP, right? So that's the video for today. Again, if you're new, think about watching a few videos of mine, and then you can subscribe to my channel. You'll definitely like my content. A lot of people have given very good feedback. Do look at the comments for the feedback from people who have been watching my channel. Otherwise, I'm going to leave you here. I'll see you in another video. Until then, take care, stay safe, and trade safe. Bye-bye.